He's the CEO of Wealth Management Group. We're going to talk to him about the market, which just opened 2 minutes ago. It is already down 1,800, the Dow Jones, 1,829 points. The futures overnight were pointing to a bad day today. So, Craig, are you with us?
Yes, good morning, Larry, Rob, and tough day for investors all across the country, waking up to some very difficult news here on a Monday morning.
So this is not all coronavirus. It's part of this oil shock as well. Talk about that.
Let's be clear. This is oil shock this morning. This is not coronavirus. What happened over the weekend is OPEC's ally, Russia, went ahead and said, hey, I don't think we're going to stop pumping oil. In fact, we're just going to keep on pumping. And at the end of the day, what we have here is a huge oil story that is transferring over to the stock market this morning. People didn't see it coming, and that's why the market seems to be taking a pretty good plunge on the opening bell.
But isn't, Craig, this driven by the fact that they don't feel like, well, cruise ships aren't going to need oil? People are not traveling like they are because of this COVID virus.
No, Larry, you're always spot on with your commentary, and on this one, you're right. So what's happened, of course, over the last month is oil prices have been coming down. And as a result of oil prices having come down, OPEC, who has large influence over the price of oil, met over the weekend and wanted its members to slow down production, because if you're not pumping as much oil, it supports the price, which again is tied to coronavirus, as you said. But this unlikely event with Russia and Saudi Arabia being at odds, that's really what spooked markets and plunged oil into this huge decline this morning, and it's definitely having its effect on the stock market.
So let's talk about going forward. Are we going to see, I mean, we obviously still reeling from the dips in the market in the last week and a half with coronavirus. Are we going to see this one of those really awful one-day drops, or is this something that'll correct itself? What do you think, Craig?
No, that's a great question. So, Robin, from your lips to the stock market ears, as you finish that sentence, stocks just traded the first level 1 circuit breaker. So we're now all going to sit on our hands for 15 minutes. There's no trading, because whenever the stock market falls 7%, everybody takes a 15-minute pause. That just happened, Robin, and we haven't done that in a long time. The reality is we should really focus on right now what individual investors should be doing, given we just halted stock trading, don't you think?
Wow.
Well, yeah, so I guess that's the question where you wonder, okay, the guy who handles my 401k, is he doing what he's supposed to be doing? And what is that, by the way?
Well, I tell you what, the people handling your 401k should have been doing stuff over the last 2 weeks. I can only speak for the Wealth Management Group team, but I've been on the air in various media sources and just reminding people that it's not just about investing, it's about financial planning. And our insistence has been that everybody should have made sure, if they didn't, that they had 2 to 3 years of cash or bonds in their portfolio, because typically that's more than enough to ride through the situation.
All right,
now,
so go ahead.
If you haven't made any changes yet, I encourage everybody not to make them right here, not to make the knee-jerk reaction. But if you haven't made changes, you should get with somebody that can provide you competent counsel so that you have a plan when we see some of these temporary bounce backs up in the market, which are likely to unfold.
All right, just to give people perspective, you mentioned stock trading has been halted for 15 minutes because the S&P is down 7%. How often does this happen where they stop trading like this?
Well, so there's 3 levels in the market, Robin. We take a 15-minute pause when the market drops 7%. We take another 15-minute pause if the market is down 13%. And then, of course, the final pause is if the market ever fell 20%, stock trading ceases for the day. And what I want to remind everybody is the current circuit breakers were redeveloped back in 2013. They haven't been here for that long. So have we used these circuit breakers since 2013? No, the answer is no. But I think everybody has learned recently, and it shouldn't incite panic, the fact that the markets are so computer-based now compared to what they used to be. We get to wherever we're going much quicker. So it doesn't make things worse. It just makes everything that much faster.
All right, Craig, we appreciate your perspective this morning. Craig Bolanos,
Thanks, Craig.
Thanks for joining us.
You're welcome.
All right, let's get a check of the weather. Hey, Mike.